Friend, one asset class that is consistently beating inflation like equity is gold. Gold has outperformed inflation and equity over 3, 5, and 10-year period. But will this glittering asset class continue to do well? Let's find an answer from our expert, Vikram Dhawan, Fund Manager Commodities, Nippon India Mutual Fund. Vikram has close to 3 decades of experience in commodity market and fund management. So let's learn from his wisdom. Welcome to the show, Vikram.
Thank you very much for inviting me on your show.
So, Vikram, what is your medium term outlook on commodities, especially gold?
So, the fundamentals of most commodities, especially in the metal space, starting with silver and even some base metals also, copper, aluminum, zinc, gold as well. The fundamentals are fairly strong, but I think because of the threat of trade war, a full-blown trade war, it has become very tricky because of two, three reasons. First of all, will the tariff lead to some sort of disruption in the commodity markets? Well, it is already apparent because for instance, a lot of U.S. oil will be forcibly exported to various countries. So I think it is changing the dynamic, at least in the energy space. The LNG prices will go up, landed prices will go up because if you're importing LNG from US, obviously there's a high shipping cost involved in that. So definitely it is impacting the energy markets. But in case of metals, we don't know where this thing settles. If the tariffs become too high, then obviously it will lead to some demand destruction in base metals, which means that whilst the fundamentals of metals like copper are very strong, but we could see some moderation in the price movement. But having said that, the trade war will also result in a lot of volatility in the local currencies. So dollar price is just one aspect of it, but the price in the local currencies may vary. And just to give you an example, last year, if you would have bought gold in the US and if you would have bought gold in Turkey, the difference in return was of at least 20-25%. So I think even in India also, as we have seen recently, the rupee has depreciated sharply. So even though base metal prices have not appreciated too much, whereas in the case of precious metals, the appreciation has been very steep in dollar terms, and rupee depreciation has added to the overall returns on these metals. But again, as of now, it is more discounting of the fact, whatever facts or whatever the opinions and analysis and forecast one can make out of it. So it's going to be a very tricky year for commodities as such, not so much for gold and silver to some extent, because there will be demand for safe haven. But for rest of the commodities, especially in the metal space, it can be a fairly tricky year.
Okay. So, Vikram, gold has been doing exceptionally well. So, in fact, gold has handsomely outperformed inflation over 15 and 20 years. But if we look at the 15 and 20 years, it has not it has underperformed equity. So, why this has happened, and can we expect this in future?
I think gold, sh- while I see a lot of comparisons with equity and fixed income,
Hmm.
but I think what you have to see is that, gold obviously is also a commodity. India consumes roughly about $60 billion worth of gold annually. Um, Irrespective of where the prices are, where the view is, people do buy jewelry, uh, mostly in the wedding season and festivals. So that demand continues to be strong. And 95% of this demand is in physical gold, whether it is jewelry or bars. So that kind of consumption remains on track, um, primarily for cultural inclinations of the Indians. Also, I think gold as an investment has done very well over the past few decades and century, so that this is very much ingrained, embedded in the psyche of Indian households. That's why we are one of the largest holder of physical gold in the world, roughly anywhere between $1.5 to $2 trillion. So I think that faith in gold will continue. obviously we are seeing some increase in financialization of other assets. Uh, you know, Most of the money is not going to gold and real estate, as was the case maybe 20 years back. We are seeing flows coming from the retail investors in the stock markets also. But I think if you think about gold, one is obviously the physical demand, the other is obviously portfolio diversification. So I think both are immune to whatever the view on gold is, because obviously I would never tout gold or gold ETFs to be a trading or a tactical play, because it's more than that. I mean, if you want to trade and make money, there are a lot of other opportunities in the commodity space or equity space than to wager on gold. So I think, and even for gold ETFs, I think as the awareness among the investors increases, we will see a chunk of physical gold demand moving to ETFs. We are seeing that in silver ETF, it is more pronounced because obvious reasons, because of this cumbersome nature of silver. It's a lot heavier and it is prone to oxidation and all those things. But again, as of now, it is a trickle. But I see this being a major factor towards gold and gold ETF, rather than what the view is, because we already have a captive consumption of gold of 50-60 billion dollars. So which is fairly, it's an argument very difficult to uh, win against Indians against gold. So they know their gold, they know their silver.
Yeah. So, Vikram, what is the correlation of gold with equity and fixed income instruments?
So I think you have to divide this into two phases: pre-COVID and post-COVID. Pre-COVID, the classical macros used to be pretty much, uh, in the game, in the sense that a stronger dollar resulted in weaker gold prices, lower yields resulted in stronger gold prices, and vice versa, as the case may be. But I think post-COVID, what has happened is that we have seen um, lot of change in the money supply, liquidity, not just by monetary policy globally, but also through fiscal policy. So I think the increase in money supply is a very strong tailwind for both gold and silver in the long run, for commodity sector as such. Because if what obviously if the number of dollars and rupees increase significantly compared to the supply of gold, silver, or commodities available, obviously the prices can only go up. So I think that has played a very important role. That is why you saw, while the yields were rising, while the equity markets were rising, gold and silver prices were also rising. That was perhaps the after effect of the liquidity, both monetary and fiscal, infused in the global system, domestically and globally, which sort of gave a very strong tailwind to gold. But again, obviously, as we have seen in the recent weeks, that the volatility in the risk assets have returned globally, and that is leading to increased inflows into gold and gold ETF. So I think once the COVID hangover sort of is over, we will see the macros reverting to their, hopefully, to the classical, unless there is again a lot of interference by the central banks, both on the monetary or by the government on the fiscal side. If that happens, obviously we this the all assets getting more correlated, that may continue. But in absence of that, you could see sort of the negative correlation that we have seen in the classical macros, which will continue. And obviously, one very important factor is the currency part of it. Gold is actually being very useful for those investors who are sitting on portfolios in currencies which are depreciating or which have depreciated. So I think all these put together, I would say it's looking ahead, gold will be slightly more negative correlated than the other asset classes, than what we have seen in the past 4 5 years.
Okay. So, Vikram, today a few PMSs have replaced fixed income securities with gold due to favorable tax treatment. So should investor also look at replacing gold with fixed income securities for stable returns and better tax efficiency?
Tax efficiency obviously is a very important factor in investing, especially through mutual funds. Secondly, you cannot argue with the long-term return of gold, especially in INR. And now that the rupee and currency volatility is very much in focus, here is an asset class which gives you a hedge against currency depreciation also. But I think most importantly, gold is perhaps one of the, if not the only asset which doesn't have any credit risk. It has a gold price risk, but it doesn't have a credit risk or a management risk or economic risk, as the case may be. Obviously, it is also vulnerable to liquidity risk because if there's no liquidity, then no asset prices will go up. So I think these things plus it's the boxes it ticks as far as hedge against black swan events or diversification. All these things make gold a very compelling choice in every portfolio. Now, whether it is at the cost of fixed income, that depends upon the long-term objective of an investor, but definitely on its own, gold is should be considered as a very important part of one's asset allocation.
Okay. So Vikram, there are so many investment instruments which revolve around gold, like gold sovereign gold bonds, gold saving scheme, and electronic gold receipts. So why do you think that investors should invest in gold ETFs?
So one of the most important attribute of gold is liquidity. I mean, gold is gold at any part of the world. Gold retains its value. I mean, nobody sells gold at a discount. So liquidity is one very important aspect of gold. So you should hold gold. I'm not saying don't buy jewelry or don't buy physical bars or coin, but at least some part of your gold holding should be in a form which is most liquid. And gold ETFs are arguably the most liquid form of gold. I mean, their liquidity is significantly better than the liquidity of the underlying physical market. So I think purely for that reason, liquidity, and also, while you want to decide on what product or what gold ETF you want to buy, always keep in mind that liquidity is a very important aspect, and gold ETF ticks all the boxes as far as liquidity is concerned, and also transparency, convenience, safety. Convenience is very important because today I think most of the people are buying and selling mutual fund units or ETFs through apps. So it is click of the button with the structural benefits and security and protection of the mutual fund ecosystem.
One last question, Vikram. How much allocation should an investor give to gold and why?
So I think in terms of allocation, it will also depend upon the sort of the nature of the existing portfolio, how risky it is, what is the beta of your portfolio, are you holding any asset classes or any securities which have credit risk. So, you have to actually calculate the risk. If not calculate, have a sense of the risk that you're carrying in the portfolio and then try to diversify it by using gold. So that becomes your minimum holding of gold. So for instance, in a portfolio of 100 rupees, let us say you identify a risk in terms of value of whatever, 5% or 2% or 3% or 10%. So that becomes your minimum holding. Also, from the liquidity point of view, you would always want at least some part of your portfolio to be solvent and liquid, irrespective of whatever is happening in the market, especially during Black Swan event. So let us say you want at least 5% or 10% of your portfolio to be liquid. So that part may have some gold because obviously, whatever happens, you will always be able to, trade your gold, buy or sell, irrespective of what is happening in the market, except there is a liquidity crisis. But besides that, even during normal volatility or turbulent times in risk assets or stock markets or even a black swan event happening, that part of your portfolio that you want to be always liquid should have gold in it. So I think that is how you need to calculate backward And then obviously it depends upon your own conviction or your own view, what cycle where we are and how much you perceive to be the economic risk or currency risk. All these things will be added onto it. But the minimum is that part of your portfolio that you want to be always solvent and liquid.
So, all right, we have come to an end to this interesting session. Thank you so much, Vikram, for your valuable time and inputs.
Thank you very much, Nishan, for inviting me on your show. And I wish all your viewers all the very best.
Thank you. And finally, I thank each one of you for being such a wonderful audience and giving us your support. Thank you so much, guys. Have a great day at work. Bye.